Hey everybody, it's Phil Cavalcanto with the Cavalcanto team and Coldwell Banker Preferred. I am continuing with our local business interview series. What I would like to do now is introduce to you John Casey. John Casey is Vice President of Mortgage Lending with Guaranteed Rate Affinity here in the Philadelphia area. So John, welcome.
Thank you, Phil.
Yep.
Thanks for having me.
Absolutely. As we had discussed earlier, so it's kind of a new normal to be, doing what we're doing now, and discussing for clients and individuals, the business and what's been happening in their business. So, my first question for you would be, kind of tell us about your business, how long you've been in the business of mortgage lending, and how you see things have been going.
So I've been in the business since 2004. I started originating right out of college. So I've been doing it, almost 16 years now. So I've seen a lot in my 16 years. I was in the crash in 2008. So I saw, how mortgages were done then, how we recovered after that. But COVID is something I've never seen before. I've never had to work out of my basement. I've never not been able to be in front of clients, face to face, being able to shake somebody's hand at closing. These are different things that we're certainly experiencing, but we're getting through them.
Yep, absolutely. I agree. It's really an unusual time where those of us that are so used to the person to person, face to face, sitting across from a table at a closing, being able to congratulate a client, and now none of us can be there except the client. So it's been a real learning curve, I think, for everybody.
It sure has. Yeah, I mean, there's such a that you want to make it personal with your client, and you really can't. But there's ways, just picking up the phone and just, saying, hey, congratulations. That was an awesome transaction. If you need anything in the future, call me. I know this is not the normal times that we normally, deal with, but, we're getting you to the closing table. We're getting you in your new house, and we're happy for you.
Yep, exactly. So, I know we've talked a little bit, but it's how has the whole COVID, I guess right now we're DC still, we're during COVID. How has all of this really impacted your business per se? I know how it impacts mine as a realtor, but from a lender perspective, how does it impact you in the services for your clients?
So one positive that I took out of this to start is, my company, Guaranteed Rate Affinity, is a mortgage company that's built on technology. So we had a lot of stuff in place already, pre-COVID, where we could do digital applications and we could do flash closings. So that wasn't any, we were kind of ahead of the norm there. Mm-hmm. Where we see the difference is, we verify somebody's income up front. Now we have to verify, 3 business days prior to closing. We need an updated pay stub and a new VOE. Because we've had, 30 million people file for unemployment. Quite frankly, we don't know if that's one of our, borrowers, and we need to reconfirm that. So it's a little bit difficult in the sense of, we're taking a couple extra steps as far as, confirming these buyers can, still purchase the home, and still have the ability to repay. But it's great to work for a company that, is kind of forward thinking, where we were, not prepared, but we were able to change a little bit quicker and more on the fly with the COVID restrictions.
Right. And I think we're all getting that way. We're all adapting and changing. And I know we just recently did a transaction together, kind of during the COVID period. So, where literally, nobody was at the table, but docs were there, and we were reassuring each other that, okay, everything's going to go perfectly. But I know the technology portion has been great to have.
It has been.
Yeah.
And Pennsylvania is a state that has laws that were put in place hundreds of years ago where, we couldn't, we needed a notary present to sign at closing. Now we have the ability to do it remotely. There's talk that it may stay long term. There's talk that it may go away after COVID's, past us, but, we don't know when that's going to be. But, some of these rules that were in place, that they're adjusting because of COVID is a positive thing. Mm-hmm. For the industry.
Yeah, I totally agree with that. I mean, and I think the notary capability, I think, even started because of car dealerships, because in order to, purchase a car, when you're sitting there, you've got to be able to have that notary, and
Hmm.
people couldn't even do that for a car purchase. And then I think I don't want to say housing became an offshoot of that, but I think we became an offshoot, and it benefited us from that standpoint. So it's nice that, from that standpoint, even from a seller now, I think doing the electronic notaries or virtual notaries is now a benefit for them, to not have to necessarily be present to transfer the house, if you will, for one
Exactly, and
person to
same
the
and the
next.
same difference with a power of attorney. You
Hmm.
don't have to fill out of a power of attorney. So if one borrower is not here and the other borrower is, like, we can just eliminate the need for, you know, my legal team to review the power of attorney, titles, legal team to review it. It just makes it a lot more seamless.
Hmm. Hmm. Um, let's talk a little bit about numbers, because that's been something that has been on everybody's conversations when they ask about the market, and they say, should I refinance? If I'm looking to buy, should I buy? Because, I'm hearing rates are all over the place, but, I know there's been some significant changes with regard to rates in the last, 7 to 8 weeks, as well as even, credit scores. Can you share with us a little bit about, like, what's the norm now? What can a buyer who is thinking about buying expect to need from a score, or what are the interest rates they could possibly see?
So I'll touch base on refi first, and then we'll talk about purchase.
Okay.
Um, if you're paying currently 4% or more, we should look at doing a refinance. Rates are, in the low to mid threes. 15-year fixed to shorten the term, or even lower than that. So from a rate perspective, I mean, rates are historically, the lowest they've been since 2012. So, refis are there for they're definitely there. There's definitely value for people that are going to stay in their house, whether it's to shorten their term, take cash out, because equity in Philadelphia, I mean, values have gone up, quite frankly. Maybe you eliminate PMI. There's a ton of reasons why it would make sense to refi. On the purchases, like I said, rates are at a historic low. Buying power has never been better. A year ago, we were a full percent higher. On a $250,000 loan, you're talking probably $150 a month. So it's a significant difference.
Yeah.
Um, Here's the thing with interest rates right now. You want to partner with somebody like my company, Guaranteed Rate Affinity, where when you're a buyer and you go under contract, we're going to be able to lock your rate at the rates that are available that day. Some lenders have tightened their belt where they don't want to lock a rate until they have it clear to close. In this market, you do not want to work with anybody that's like that, because 4 weeks ago, one day I'm at 3.25, the next day I'm at 4%. It was one of the biggest roller coasters I was ever on in my 16 years, trying to predict where rates were going. We've seen a lot of stability now, which is great. So, a great benefit with us is we lock you in. So say your rate's at 3.25, and rates do drop between now and your closing date, we'll float it down for free. No questions. Not going to collect any more money from you. So it's a great benefit. Now, with regards to credit scores, on a conventional loan, we really haven't seen any changes. Some lenders have changed their guidelines where they want 20% down and they want 700 credit score. We can do it as little as 3% down. We can do it as little as a 620 credit score in a conventional loan. So as on a conventional mortgage, it's business as usual. Now, if your credit score is at 620 versus 800 on a conventional loan, there's definitely going to be a difference in price.
Mm-hmm.
You're not going to be offered 3.25. Depending on income levels and certain criteria, there may be a little bit of a break, but you will see some impact. With regards to FHA, FHA is another bucket where, our credit score guideline went from 580 to 620, which is still reasonable. There are some different guidelines as far as reserve requirements that'll be needed. But it's, but there's product for people looking to buy. We'll put you into a great product. And if you're military, we have amazing VA rates. We waive all our lender fees for VA as a thank you for your service. And then the last bucket is jumbo. Jumbo is anytime you have a loan amount over 510,400. So it's a niche product. You know, you're borrowing a lot of money. Those guidelines are very tight these days with the liquidity. They are still available, but those are gonna require a lot higher credit scores, a lot more in reserves. You know, and they're definitely scrutinized heavily. One way I'm kind of combating that right now, as far as to eliminate jumbo, is to do a first at 510,400, and we do a second to bridge the gap, you know, to make up the difference. And that's really worked well.
Okay, so we're returning kind of to get around the jumbo is to do the back to the days of the first and second.
First and second
That we saw for a while.
And we're getting back to, I mean, and quite frankly, we can do a first and a second on a conforming loan as well, up to a 95% LTV. But really, we want to look at, you know, with buyers, you know, how long are you going to be in the property, you know, what's your credit score? Because a lot of times it's cheaper to do, you know, monthly PMI or even one-time PMI where we just buy it out. I think that's what I did with your last buyer, Phil, is we bought out PMI, and it just worked out, you know, for the client, which was great.
Yeah, no, and the client was very happy with everything. So, you know, that was the good thing on that. Is there so interest rates, at least for conforming, you know, credit scores, there have been a few changes, because I know I've heard horror stories with some lenders that, you know, have jumped to these outrageous numbers that they never had before because, you know, quite honestly, they don't want to take the risk. I think personally, now I don't know that for sure because I don't work with those clients, with those lenders, but it's, you know, it's nice to have a lender who says, listen, for us, it's still kind of business as we do. We still have to look at your score, and that's going to impact your interest rate, but at least we're able to offer something to a 620 credit score buyer.
Correct.
Which is good to have. Yeah.
Correct. I mean, some lenders, and I can tell right off the bat, you know, one of the big, you know, lenders you see doing a ton of advertising. I'm not going to tell you their name, but you can probably figure it out if you watch TV. Yeah. You know, I know they raised their rates on FHA to the point where nobody was going to do an FHA loan with them.
Right.
You know, they just wanted to turn the faucet off, and the way that they turn the faucet off is they just completely raise the interest rates.
Yep.
And we're not in the business to raising interest rates. We're in the business to getting buyers into homes, you know, at low rates and great service. So, you know, we're committed to that, and we're not changing that because of COVID.
Excellent. And I know for me, for my team, you know, it's all about the service. It's about the service that happens before, during, and after the loan. You know, I'm always a big fan of reaching back to my clients after the fact to say, what's your current interest rate? Is it time to refinance? Do we have equity? Have you been in the house for 5 or more years? Is there, you know, instead of pulling equity out, is it time to just refinance and go from a 30-year to a 15-year, and your payment stays about the same? You know, and you're shortening the life expectancy, if you will, of your mortgage.
Absolutely. And what I tell my buyers is, you know, we want to be your lender for life. You know, it's not just this, you know, we're not a transactional, you know, business anymore. You know, it's a relationship that we want to, you know, continue. So yeah, I mean, I'll reach out to my client base and, you know, and say, you know, hey, you know, last summer rates were at 4.25. Now they're at 3.25. You know, they were great when you bought. Now they're even better. Let's take advantage of it. You know, and it's the mentality of just wanting to, you know, be, you know, partners for life with that.
Yep. Agreed. Totally agree. So it's, you know, we work with both a lot of sellers and a lot of buyers. And one thing I've been hearing from a lot of buyers right now is, should I wait, regardless of being able to see the house, or, you know, which is a whole nother thing, which I'm not going to get into, but being able to, you know, view the property, whether it be online or whatever the options are for them. You know, if the buyers that are coming to us saying, should we wait? Should we do it now? You know, if we're going to do it now, because we do work with a lot of first-time home buyers, what should we also give them as a checklist, as a customer, to say, okay, you're getting ready, you think you're going to buy. if we're going to do it, here's what you need to have lined up and established to be able to start this process with me and with a lender? What are you going to be looking for?
Yeah, I mean, the first thing right now, I mean, I would ask the buyer is, what type of income are they receiving? If they're an engineer and they're on a W-2, we're not going to have any question or concern with regards to the income. But if you're self-employed, or you know, if you're in the restaurant industry, those loans are tougher these days. I'm not gonna sugarcoat it, because of the fact that a lot of people are out of work. So I would start there. Talk about their income. Talk about how much money they have saved up. There's the down payment portion of the loan, but then you have to realize, in Philadelphia, closing costs are going to run between 5 and 6% of the purchase price. Some buyers don't know that. So it's good to get in front of them and say, we're probably going to need 9 or 10%. Also the fact that money can be gifted. Mom and dad can gift you, grandparents can gift you, fiance, mother, brother, a sister. It can come from elsewhere. We need to educate them about the local grant programs we can participate in. So, those are the things, that we want to talk with buyers, and I certainly have the conversation with them up front once I talk with them, because, we want to make sure that they understand what they're getting into. And in regards to when it's right to purchase, I mean, I sell numbers for a living. The numbers I'm offering right now are the lowest they've been in my 16-year career. So should you buy today? Absolutely. Is it uncertain times, or it's weird times to access properties right now in Pennsylvania? Sure. But as soon as this passes, if we're going to wait until it passes, rates are going to stay low, I think, at least for the foreseeable future. Mm-hmm. I can't predict a year from now, but I think in the next, 60, 90, 120 days, you're going to see some stability with regards to interest rates.
Yep. And I think, and you touched on it, which is great, which leads me to also kind of give people the direction of, if you are considering buying in the next 30, 60, 90 days, which is usually the length of time the pre-approval is good, they should go through that process now, while they have the time to even get everything over, have the company even look into the potential underwriting, getting everything checked and verified, because I think you're probably expecting the same thing I am, and that is that once this passes, and we know it will, there's a huge demand that is pent up between the number of people that bought homes last year and the number of people who want to buy homes this year who can't see them. And I think once we open those floodgates of, yes, you can go out and see homes, I think buyers are going to be in still a seller's market, but almost a more aggressive one than we saw, because we don't have the inventory. Mm-hmm. So usually this time of year we have the inventory. So I think buyers need to be prepared. They need to be approved for the right numbers, know if they can even stretch a little. They may want a monthly payment of X, but if they can go an extra $50 or $75 a month, what does that give them in the way of buying power? Because I think they may need to look at that once we start being able to show buyers that are ready to buy, who've been watching these homes online but not go anywhere. I tell buyers, if you're seeing it, 10 other people are looking at the same home.
Exactly. What is everybody doing right now? They're surfing the internet, looking at houses. They're seeing what's out there. And you've been quarantined in your house for, wherever you're watching this, you've probably been in your house, the last 7-8 weeks. Whether or not you want to stay in that property. You're going to get a lot of phone calls saying, hey, this house is too small now, Phil. I need you to sell it. I need to buy a bigger one. Yeah. Or, you have a renter that's living with roommates, and they're like, what am I doing? Let's get in the real world and let's buy a house. Mm-hmm. And you're going to see that. So yeah, I mean, now's a great time, because we're seeing there's only so many people buying right now during COVID, whether it's relocation or whatever you have. I feel like I have more time right now currently than I probably will have 30 days from now. At least I'm hopeful of that, because of what you said is you're going to see buyers that are going to come out, get in front of it. Let's look at your credit score now, because there might be that one medical bill that you owed $100 to a dentist and it brought your credit score down 100 points. Let's get that removed. So when you're ready to buy, that's not going to impact your rate for the next 30 years or however long you live there.
Yeah, no, great advice. It's getting ready now, if you will, what I call loading the cannon, getting everything ready to go so that when they say, okay, go, they have the power, they have the knowledge, they have the pre-approval, and it's easy enough to just find the right home, negotiate that out and attach that lender paperwork to it. And just
exactly. I think half the battle right now is when you're making these offers, and like you said, inventory is low. If you're not pre-approved, by the time you get pre-approved, you're going to have 2 or 3 offers on that house already.
Yeah.
So you want to have, like you said, you want to have your chamber loaded. So it's just a matter of, hey, shoot John a text that I'm going to make an offer at $250,000, and you're going to have a pre-approval instantaneously. I can do it from my phone as long as I have a completed application. I can send an updated pre-approval letter wherever I physically am.
That's excellent. That's excellent. And for those that are watching the video, just to let you know, I'll have a link that John will provide me to link to his application underneath the video or attached to the video, depending on where you're seeing it. So if you feel after watching the video, yes, I need to get approved because I do want to be ready to start when we're allowed to start physically seeing houses, because maybe you don't feel comfortable buying without seeing the house, and I get that. We'll have that link available so you can actually click on the link, it'll go, and John will be in touch with you after he gets all your information. So we'll do that. John, just to kind of wrap things up, is there anything that you would recommend, or any recommendations that you'd like to share with our audience?
I mean, the biggest recommendation I have is, obviously, there's really 3 components of what we look at with mortgages. Number 1 is credit. Mm-hmm. So with credit, if you have some higher balances on credit cards, meaning that say your limit is $5,000 and you have that credit card at $4,000 right now, my recommendation is try to pay that down as much as possible. Try to get it under 30%, because your credit scores are probably impacted anywhere between 30 and 40 points probably, and it could be per trade line. So that's a great tip to try to get in front of it with regards to credit. Regards to assets, obviously, we're all home right now. We're not, I'm not spending a lot of money on going places, on gas, for my car. Try to put that away into a savings account, because, buying a house is an investment, but you're going to have to put a little bit out yourself. So the more you can save now, the better off you're going to be in the long run. And then with regards to income, obviously, continue to hopefully continue to work, and you have the ability to work during this pandemic and keep bringing in your income. But if you need if there's a change in job, that's okay, as long as you're on a W-2 or have a set a set hourly rate. We don't need a full we need a 2-year history of employment, but that doesn't mean you need to be on your job for 2 years or even 1 year. You quite frankly don't need to start. I need an accepted job offer letter, and you could potentially close on a mortgage. So, don't feel, even though you haven't been at your job or you're just in school 6 months, you can use, schooling as a 2-year history. So, don't feel that, reach out to me, ask me any questions. But I mean, those are really kind of the tips that I would say before, before pre-approval.
Awesome. Very good. Very good. Well, we're there for you. You're there for us. So I'm sure after this, we'll be in touch more. And once we can, I know we're all waiting to get back to business in a new environment, per se, but at least be able to get back to business, which I know is something we're all hoping for. Yep. So I'd like to thank you for participating today and kind of giving us an idea of what's going on, in your world of mortgage while, we're all kind of working from home. Great tips to our audience, great information. As I said, I'll have the link to John's application that'll be, embedded afterwards or beforehand, so you can actually see it and click on that link if you need it. And other than that, I'd like to thank John Casey with Guaranteed Rate Affinity with participating today. And again, his contact information, his name, his number, his email address will also be provided, surrounding this at the end of the video. And then wherever you're seeing it posted on social media, you'll see that information. So do not hesitate to reach out to John with any mortgage questions, whether it be related to interest rates, timing, or anything else. He's always available for you. John, thank you again. I appreciate it.
Thanks, Phil. Thanks for having me on today.
Absolutely. Have a great day. Stay home, stay safe.